All right. My name is Sam Sells. If you haven't heard from us before, and this is Jesse Sells also on the call, if you can see him there. And we are really, really excited for the opportunity to share with you what is really a huge passion of ours, and that's making a difference through commercial real estate, creating safe, clean, affordable homes for people to live in. We firmly believe that the government cannot solve this problem, but we as private citizens can, particularly and only when we align incentives so that we can make a difference and make money in the process. This key of aligning incentives is what makes all of this work today. If you have questions, please throw those into the chat feature, and we'll make sure that we're able to capture those and respond to those as we go. And also in the comment section, you're going to find registration. If you're interested, or when you are interested and you want to make a difference and you want to invest in a way that makes and creates meaning, please reach out to us. If you just want to learn more or want to stay up to date with what's happening, make sure that you give link in there. You can comment to us on DMs via LinkedIn, or click in there, register on wildmountaincapital.com and send us your email. We'll be able to provide all the latest updates as we go through and talk more and more about what we are doing, creating impact. Maybe now is not the right time for you to invest. Maybe it's another time, or maybe now is the time for you to invest. And we're happy to talk about that. Without further ado, I will move forward and let's talk about the Impact Fund that we have coming, and what it is all about. So first and foremost, this is a 506 Reg D 506C offering, and it's available to accredited investors only. If you are not accredited or you're not sure what that means, please feel free to reach out to us, Sam at wildmountaincapital.com, Jesse at wildmountaincapital.com, or you can hit us up at info@wildmountaincapital.com. We also get those emails. We're happy to help share with you what the SEC says means, SEC being the Security and Exchange Commission, what it means to be an accredited investor. If you already know that you're an accredited investor, awesome, thank you. What a wonderful status, and you have an opportunity to invest in this fund. This fund is a different kind of fund. This is an impact growth fund. Our focus is to maximize returns, but to do that with a purpose. We do that through creating meaningful impact in these communities, and we're going to go into more of what that looks like. But first, I don't know the future. I am not Nostradamus. I don't know what's going to happen tomorrow. I could fall over. I could hit my head. I don't know, right? We don't know the future. We create models that help us understand what could happen if we follow certain business plans and we do certain things. Jesse and I have been doing this now for a long time. We've done dozens of deals. We've done this tons and tons and tons. We spent tens of thousands of hours engaged in these activities. We know for sure we don't know what the future is. We could not predict COVID. We couldn't predict the things that happen after COVID. But what we do is we prepare ourselves for the future, and we use models to help us prepare ourselves so that we can go forward. So please understand that all of the numbers in here are projections. They're what we're aiming for. We feel like we can get there. But again, COVID happens or something else. It could alter the timelines. It could alter the returns. And we'll have to see what happens, but we're going forward with the best foot and as aggressive and as measured as possible. This is what we're going to talk about today, and let's talk about it. So who am I? I am Sam Sells. I'm a powerful son of God. This call is all about how we make a difference, how we create, and what we do. Jesse and I, we are leading an international movement, and we are so glad you have decided to join. I have made a huge difference in the past, and on a very public stage, but unfortunately, most of the time, I just kept myself in the shadows. We're not doing that anymore. We're moving forward and we're being very public about it. In 2013-14, you may remember the worldwide Ebola scare and the crisis in West Africa. People were dying. It was pretty severe. I'm the person who authored the request for $1 billion to Congress to fund the entire response to Ebola. I wrote it. I authored that request. I sent it to Congress. They approved it, and they gave us $1 billion of OCO funds, Overseas Contingency Operations funds, transitioned it into ODACA funds, Overseas Humanitarian Disaster and Civic Aid, Civil Aid dollars. Those dollars were then funneled and pushed right into the Ebola response. I wrote that request and went to Congress. I know how to have an impact on a major stage. I'm the person who authored and sent the request to the Secretary of Defense, Chuck Hagel, and the President to send up to 3,000 troops and provide support to the United Nations international response to Ebola. When Chuck Hagel said yes, he sent his response to the U.S. Agency of International Development and Sam Sells. I still have a copy of it. He wrote that request, Chuck Hagel did, responded, and sent it to me. I was in Liberia and was the field officer responsible for all the designing and overseeing the build of over 15 200-bed Ebola treatment centers all over Liberia, Guinea, and Sierra Leone. Those became the standards by which we build these things now, and the others do. I spent over a decade working throughout 20 plus developing nations, helping them to create sustainable healthcare systems. One thing I learned is that the only way we can ever make something difficult sustainable is to align incentives. When I could get a 3-star, 4-star general, a provincial governor, the minister of health, the embassy, the president of the country, if I could get them to see how providing healthcare to populations that can't pay for it can directly boost their personal value, then and only then did it become sustainable. That is when we could succeed. Giving free stuff to people is not how you help them. All right, it may be a band-aid, but it's not how you create systemic and generational change. It's not. The entire point of what our company has done over the past 5 years, and the point of this fund, is to align incentives so that you as investors and us as investors make money, enabling us to create impact in these communities. When we can make money helping other people, it becomes sustainable, it becomes repeatable, and we can do it over and over and over again. I said this just earlier, the government will not and cannot solve the affordable housing crisis, but we can. Not only can we solve it, but we can make a lot of money in the process. Let's use capitalism to help us make a difference, right? That wealth we create enables us to repeat this process over and over again. For example, if I can help you double, triple your net worth, then I know you can go out and do 2 times, 3 times more than you ever could before. If you want to 10x or 20x your net worth and make a difference, that's going beyond this fund, then reach out to us personally and say, hey, Sam, I want to do something bigger. I want to do something bigger. And if that's the case, we're happy to work with you and help you do something bigger. I firmly believe that we are meant to do something more than just make money and die. We're not just here to chase transactions and then hang out with our family. Like, we can do more. We can do more. This fund is a tool that we are using to improve as many lives as possible. And we are going to change over 15,000 lives through the rehabilitating of these homes, cleaning them up, and making over 500 safe and affordable homes. Now, Jesse on my team, Jesse is the guy who goes out there and actually does the work, right? He's the one that actually makes the vision happen. He's our co-founder. He was crazy enough to join me on this crazy expedition, and he's the one who goes out there, works with all of our asset managers, the charities, the nonprofits, and so forth and so on. You can see my international upbringing, NGOs, that's a non-government organization. Those are nonprofits, international NGOs. Sorry, I get some of that stuff, that vernacular comes into my day-to-day even now, after I've been doing that for over a decade. So the short of it is we make a difference and we want you to come help make a difference with us. Right. This is our philosophy. Impact matters. Right. We are only as good as the impact we create. Talent and team focus, we've got to be focused on those things that matter. When we focus on the things that matter, then the real estate, the numbers, the math takes care of itself. We go back and look at the math and we see where we are missing, and we go back and focus on the people, the product, which is the buildings. What are we doing wrong? How can we improve it? We have learned and we know that systems create profit, right? Systems create profit. Hone them, align them, we work with them. We work with dozens of charities, nonprofits, religious groups, healthcare providers, housing authorities, and more to create a strong support network that helps us achieve what others cannot. We've just gotten into the grant process of getting grants. Free money, or it's not really free money. It's money that is tied or paid or helps our residents and enables us to generate more profit. As religious groups and charities and nonprofits take care of our residents, rent gets paid. And as that rent gets paid, our turnover decreases. We're able to run a more profitable, more tight ship. Our collections are higher, and that generates more profit for you as our investors. We create something that matters for our residents. We work with them, we help them. If they refuse to work with anybody, yes, they're going to get evicted. They have to. They're not ready. They do not have the capacity to live and keep themselves clean and safe and use their money wisely. All right. When they're ready, they can come back. But until then, we're going to do everything we can to help become successful and happy, in the sense that they're going to take care of our property. They're going to take care and respect our managers, and they're going to pay their rent. It's important for them to become self-sustainable. In our philosophy, we also believe in no fluffy numbers. All right. You're going to see projections in this document that are conservative. They're stable. They're things that we feel very confident over the years that we can hit or exceed. And we don't like doing these crazy models. Now, no model is correct. Nothing projecting the future is 100% accurate, right? It's just not. It's not. That's why every single person you talk to says either we're going to go off a cliff or not. They don't know. Everyone just says, this is what I think and why. And those are models, and we project and we talk about those things. But we use a multi-pass underwriting process to get where we want to go, right? And we do things like declining rents and increasing cap rates, capitalization rates, basically how much a property is worth, which is exactly what we're seeing today. As a company, we track things a little bit differently than other companies do. Yes, we do care about net operating income and net profits and distributions. Those things do matter. But what really matters, what creates that stuff that we're able to deliver to you as our investors, is what we're doing on the front end. So rather than focused all on the back end, we're focused on the front end. This fund right here is going to spend over $4 to $5 million of impact. We're going to improve and work on and govern over 500 homes, right? Units, 5 to 6 properties. We're going to improve, create the environment, the systems that can improve 10 to 15,000 lives. That matters. Initially, our projects we feel are going to be worth around $21 million. And we feel at the end we should be north of $40 million collectively over all the projects, right? That's what we feel like, and we'll talk to you about why. These pictures right here are real pictures of one of our projects. This is a 180-unit property in Dallas-Fort Worth that we took over with an institutional partner of ours, multi-billion-dollar firm that loves working with us. We enjoy working with them. On the far left, you see this nasty pool that had been like that for 6 years. All right. Ugly units, broken windows, drug deals going down, all kinds of crazy stuff at this property. 6 months later, that's what that pool and that's what the front of the property looks like. All right. A little bit later, last summer, you see there, Jesse had coordinated and worked with Boys and Girls Club, and now they host after-school events. You see kids there playing, spending time together and enabling their parents to work or do other things that they need to do. That's impact. The value of that property has gone up substantially since we bought it. Substantially. Why? We created systems and we created impact. We made a difference. How we do this, this impact program you see here, this is not a gimmick. It is not ESG on steroids or anything else like that. I have a podcast that is thrown. There should be a link here in the comments, or reach out to info@wildmountcapital.com. Happy to link to you, where we go through in detail how we create impact and how that impact actually generates profit. Here's our team. So you see Sam sells, Steve sells, Jesse sells. Yeah, we're a family and we care about other people's families like yours. You see my dad there's Dennis, Steve sells, gray hair. He leads our constructions. He's been in construction for longer than probably most people on this call have been alive. He's the kind of guy who's like, why would we do that when we can do this? It's half the price and it gets the thing done because he's done it 7,496 times and he knows, right? That's the kind of people you want. He's responsible for making sure that we can pump out 20 units a month at a property or 15 units a month at a property. He's the one who actually makes the renovations happen, him, his crews. And because it's him and his crews, we can keep the ship tight and the expenses low. Jesse runs all of our operations, as we said before. Tony right there, he is our director of investor relations. You're going to get to know Tony. The other folks there, Regina, Monica, Lanasha, Star, crazy impactful in all the things that they do. Star as our asset manager, she's the one overseeing these property operations and making sure that the stuff happens. We have a track record. We work with an institutional grade operating team. That alone right there should say that we're worth working with. That's a multi-billion-dollar firm that came and works with us because they have seen who we are and what we've done, and they enjoy working with us. We've been with them for a year, and we work with them on the projects. One of the reasons why they work with us is because we are vertically integrated and because of our successes and our failures. They didn't want somebody who's new, who's only had a couple of successes in 2022 or 2021, because everybody was having success. They wanted somebody who had been through the trenches and created something special. We are vertically integrated because nobody cares more about our properties than we do, and nobody can create impact the way that we do. One of the projects in this fund we currently own, and it's a project where the lender, we'll talk more about it, but the lender came into a liquidity crisis. They stopped being able to fund the construction. When we bought the property, we're at 46% occupancy. This is 245 units, by the way. And 10 months later, we're at 83% occupancy. We were crushing it. We were flying. If that chart looks like anything other than success, I don't know what success looks like, but we were crushing it until they ran out of money. They had to get bankruptcy attorneys involved. Our attorneys got involved and it became a bit of a mess. But this is exactly what happens when we use our dollars to make a difference. We put over 100 new units on the market that were affordable. When the fund and as we acquire this project from that lender, we currently still have it. We're still currently in a little bit of a tussle with them. The fund will acquire this, kick out the lender, everything goes away. It's a new project, new property. In the fund will enable this to happen again. Right. And we'll be able to finish that project and move on. And by the way, we're going to get it at a screaming deal, millions under what it is currently appraised at. Now, that's what success looks like. That's exactly what happened. And this isn't a small property that we took from 46% to 83%. Remember, this is over 100 units in 10 months. This is great. So what is the strategy? Like, how are we going to make a difference? How does this even matter? And here's the deal, right? So the strategy overview, we're gonna recapitalize these 7 properties, our 5 to 6 properties. We're going to create profits through our impact, and we're going to distribute those properties or those profits. Why recaps versus acquisitions? in the marketplace right now, there's a big difference between what people are trying to sell their properties for versus what those properties are worth. What those properties are worth because of the rising interest rates and everything else is much lower. And we haven't been able to find anything where we can create as big of a difference as the properties, these projects that we have. Why are these projects in the position they are in now? Well, we bought a bunch of mobile home parks right before COVID. We buy these mobile home parks December 2019. You remember 3 months later. So it was like October, November, December 2019. 3 months later, 2020, COVID happens. All right, we're deploying capital. We're getting after it. And COVID happens, the world stops. 8 months later, as the world's moving again, we go and we order dozens of mobile homes, and we're like, okay, let's get brand new homes. We're going to start filling these parks up, and we deploy that capital. And all of a sudden, it takes almost 3 years for those mobile homes to get to us because the construction pipelines came to a complete standstill. Now, fortunately, we bought these projects for pennies on the dollar. We got them into 4%, 4.1, some of them into 4.17% long-term debt, like beautiful debt, fixed rate, nothing to worry about. But mobile homes didn't become available again until really the middle of 2023. But by that time, 3 years later, we're undercapitalized. We need to recapitalize these projects and take them to the end. We're going to talk about specifically these projects, and you're going to see what I mean. Every single one of these was purchased as a distressed, ugly property that had been completely neglected, and we're making a difference. We're going to go make a difference. So we're going to recapitalize and redevelop 2 mobile home parks, 2 apartment complex, a KOA campground, and maybe 1 more property in the next 3 to 10 years. Hold that as these properties are done, completed. A couple of them we will probably sell in the middle, return capital, and continue to operate the fund for 10 years. This is a 506 Reg C, a 506C Reg D offering. Again, you can see there, what is the Class A structure? So there's 2 structures for this fund. Class A1 gets a strong preferred return of 10%. All right. Easy. You invest 100 grand, $10,000 a year is what the preferred return is. And that's what we're working to provide to you every single year, year over year, throughout the entire life of the fund. If you want something that is steady, predictable, and expected, you can do that. Again, something crazy like COVID happens, and we're partially through the renovations, things could be just a little bit different. But that's what we're aiming for. Right now, we are not in that position. We can get after each one of these projects. In fact, we just are finishing up one of our mobile home development projects that we recapitalized and finished, and we're getting exactly where we had anticipated. So Class A2 structure, so there's 2. One is at 10%. The second is a 7% preferred return, but you also get to take the ride with us on the equity upside. So that has a much higher earnings potential. So it is a little bit higher risk, but it's also higher risk, higher reward. But it still has that set 7% preferred return. All right. Aiming for average annual return of 14 to 20%. Over 10 years, if you could average 15 to 20%, that's huge, right? That's 2 times what the stock market averages over a 50-year period. All right. And for those of you who really want those tax savings, cost segregation studies will be performed and allow you to just, the tax savings on mobile home parks are just fantastic. This is how the equity is structured, 30%, 70%. Class A1 is the first to get paid, A2, general partner after the senior debt. So we put ourselves in last place. If something were to go wrong, which does happen in real estate sometimes, you guys will get paid before we get paid. All right. Class A structure limited partner. We talked about A1, A2. We just went through those details. This is here. For those A2 structure, this is how in the beginning, there's going to be a lot lower returns because we're getting after all the development. We're adding dozens and dozens of new homes. We're renovating dozens and dozens of apartments. We're really just getting after it. Here's the 245 unit return structure is there. We're going to host a webinar just about each one of these properties so that you can see them specifically. And then we're going to talk about there's a KOA campground transition that we're working on from an old, dusty, distressed large mobile home park that is nearly vacant. Then there is another development that we're working on. We're going to talk about that one, a webinar on that as well. Here's a little bit about what and how mobile home park benefits work, being really the last bastion of affordable housing. But because most people know about apartments, we added this for your benefit just to kind of understand a little bit more about how good are mobile home parks as an investment. And the opportunity, I will say, Jesse and I were at a mobile home park yesterday, one that's going to come into the fund. Just the opportunity there to create a huge difference is amazing. So why a fund? Why not just invest directly into each specific property? Well, a fund is diverse across multiple properties. If something happens in Tulsa, Oklahoma, for example, it's regionally located and it may hurt or reduce the earnings potential of that property in Tulsa, but it's not going to reduce the earning potential of our assets in Texas. Okay. And that's one of the great things about a fund. It reduces risk across multiple assets. We also are doing different asset types. So mobile home parks and apartment communities have different return structures, meaning mobile home parks tend to cash flow a lot more. However, mobile home parks, you make most of your growth in the beginning, and then it stops once you do all the development. Then it doesn't grow quite as quickly as an apartment complex will as far as equity growth. All right. Cash flow from mobile home parks is far stronger than cash flow is from apartments. Apartments are more steady. They're easier to sell. They're easier to get debt on. So by combining these together, we're really stabilizing the portfolio. Is this right for you? Well, are you an accredited investor and do you want a meaningful investment? Do you want to make a difference? Do you want to invest in a way that is bigger than yourself? Then this is exactly for you. This is exactly what an opportunity for you to make a difference and invest in a way that also makes money. And we like fun people who are easy to work with, for sure. All right. Here's some frequently asked questions about mobile home parks. This will be left in here. You can take a read on this and go through yourself and ask, hey, where do you find mobile homes? How do you do the infill strategy? Important thing I want to point out here is, can I invest using self-directed IRA funds? And the answer is yes. We've done this numerous times before. You can absolutely invest through your IRA. If you have questions, concerns about how to do that, come talk to us. We're happy to help you invest. Now, the fund will open the beginning of January, right? The attorneys are still working on the documents. They're expecting early January to get those done. So sometime in January, early January, maybe mid-January, the fund will come open. We'll send out a notification and it will be done on a first come, first served basis. And we're going to get after it. Bottom line, we believe investing in communities where we can create the biggest impact is the hallmark of true investing. This goes way beyond our chase for dollars. It's not just about making money. It's about making a difference. It's about creating meaning in your life and with your dollars. So I strongly encourage you that if this investment opportunity, making a difference, matters to you, then dig into this with us and come join us. If you're not ready, that's okay. get on our, send out an email to us, info@wildmountcapital.com, and get to know us and follow and, subscribe to our newsletter and learn what we are doing out there in the investment world. So are you in? Are you ready? Are you ready to go and make a difference? If you are, commit. Okay. The only way things ever happen is if you go and do it. Right. So commit to it, review all the documents, submit your investor verification letter. If you're not sure how to do that, reach out again. Happy to help. Even if you don't invest with us, we're still happy to help. And then fund document. When you fund the document, when you fund the investment and you've signed the documents, you're in. You're in, and you are now part of making a difference in 10 to 15,000 lives. That's how many people are going to be affected by this investment. So I'm going to turn this time open to everyone for questions. If you have questions, please throw those in the chat function, and would love to talk to you guys more and answer questions as you have them. All right. Do we have any questions? I can't see those questions. So Tony, if you can send them to me. All right. All right. Good question. Um, all right. So the timeline is in mid-January. And yes, we are going to have some additional webinars to talk about the properties specifically that the fund will be investing in. That way you have a very good understanding of what each property is, what's being delivered, and the impact that it will create. All right. My favorite color is green. Thank you. All right. Yes. Good question. This recording will be made available afterwards. We'll send out the link. I know quite a few folks who wanted to be on this, but it's Christmas time, everybody. So we'll send that out afterwards so you guys can watch this and look at it. All right, good question. Can you 1031 exchange into the fund? At this time, this fund will not accept 1031 exchanges. Reason is a 1031 exchange has to go into a investment as a tenant in common or own that investment entirely. In this scenario, what you would need to do is if you have a large 1031, reach out to us and we can walk through how you can invest with a 1031 into a project. So it wouldn't go into the fund itself. It may go directly into the project alongside the fund. And that's how the investment would occur. So not into the fund itself, but into the same project where we can go and make a difference, improve lives, and make money in the process. All right, we got links have just been posted into the podcast. So that answers some of the other questions about how do you um, connect with us afterwards. Perfect. All right. If you want any of those links, because they are not clickable, go ahead and um, email info@wildmountaincapital.com or send a comment on LinkedIn and we will get those over to you. Yes, this will go out in January. The investment opportunity will come out in January, or all the documents will come out in January. Early January, we'll launch the other webinar series to finish up talking about the 5 different projects. Where can you access all of these documents? So when you reach out to us, we'll connect you into the portal and you can get access to this recording and any other recordings. There's a much longer version of this. It was an hour and a half that we also did. If you really want to hear a lot more about myself, Jesse, and about these investments specifically, all of that is in the InvestNext portal, and you can sit in the deal room. You can access all of those things and make a decision yourself. And yes, the documents and the recordings for as the webinars come, if you miss one, all of that will be into the portal. So you can log into the portal, and if you get access, log into the portal. We're not going to spam you if you don't want to receive emails. No problem. I get hundreds of emails every day, so I totally get it. But this is something that we feel is really, really important. This is how we make a difference. And so please feel free to reach out and get logged in, get access, stay up to date with the newsletters and so forth. All right. Also, yeah, good point, Tony. Go to wildmountaincapital.com /join, JOIN, and you can go right there and log in, subscribe, and we'll get the information and we will get you added into the systems. Again, anytime it's too much, back out, no problem, right? And you point to a specific project you're working on. Okay. Question, can we point to a specific project that we're working on right now? Yes. So we have an apartment complex. We have a mobile home park. We do have apartment complexes too. We have a mobile home park called South Acres Community. It's south of Tulsa. We just added 13 brand new homes there. We renovated a bunch of old homes. We got rid of these old nasty homes that were out there. The crazy thing is, not the crazy thing, the natural course of events is Steve was out there and he goes out there and spends a lot of time out at these properties. And as they oversee the work, he said he noticed something that happened. He came back, told me this Monday this week. He said, Sam, it's awesome. Kids playing now. I'm like, what, Dad? Like, yeah. He said, kids didn't play out there when he first got there because there was crime and there were some bad folks in this property. All the bad folks have been evicted. It's been cleaned up. Homes that were disgusting got destroyed, hauled off, thrown in the dump. Brand new homes have come in. Newer homes that had needed to were renovated, cleaned up, and then sent out, rent to own, or sold to new people in the community. And now there's kids playing in the park area now. He said it's just been a long time since that's happened because bad people were there. And so does, I mean, that property has tripled its net, its revenues in the past 6 months. It's still got a ways to go before it's finished. We should be finished there here in the next couple of months. Just hit break even there from way in the negatives. Awesome. Like every dollar now, every unit, that's revenue, that's profit, that's distributable cash. and it's a clean community now. So that's a great question. That's an active project that we're doing right now. And I will tell you that the prices of things right now versus what they were in 2019, completely different. And so every budget we had in 2019 got busted because it costs one thing that we used to get done for $3,000 is now $9,000 or $10,000. And when something triples in price, that's going to bust your budget, especially when your budget's in the millions of dollars for renovations. Okay, great question. All right, tell me what hasn't worked well. Well, um, this experience that we've gone through as we've renovated properties, we found some things that hasn't worked well. For example, South Glen, the 245 unit apartment complex. What didn't work out well was we've used a broker that had brought us lots of great lenders, and then they brought us a lender they had never used before. We didn't know them. Nobody we knew them. We decided to go with them. That lender was not well capitalized. They did not keep our so when we bought the property, we bought it with $1.5 million worth of construction loan. That lender did not escrow that construction loan. That lender got into when the interest rates in 2022 went up, and they got into a liquidity crisis, and they used our construction funds to fund their project or to fund their business. I guess, I don't know, it just evaporated. We couldn't get access to a construction loan. We couldn't finish the project. We came to a screeching halt. And yeah, so that didn't work out very well. What did work out well is getting good attorneys involved and making sure that we were able to protect our investors, which we were able to do. So our investors haven't lost money on that project. In fact, they won't lose money on this project. It'll get sold to the fund. The fund will buy it, still get it for a great rate, take care of all of our investors, get rid of the old lender who just overextended themselves, and they're New Yorkers, so they don't care about humans. Just kidding. I know some New Yorkers do care about other people, just not in the lending space. So anyhow, so we moved on. That's a joke. Just the fund will replace them. We'll move on and be able to finish out this ginormous project and capture the significant upside that still sits there. All right, question. Tell me a little bit about ESG versus impact. Okay, great question. Not planted at all, but great question. So ESG, environmental, social governance, you hear a lot of that and you're like, oh, that's bummer. That makes everything so much more expensive. ESG is different. ESG focuses on the outcome, and it's really like, getting after reducing carbon footprint and so forth. I don't care about that stuff. I do, but I don't. What I care about is making a difference. We can use impact. We improve lives. We can reduce our water usage, which reduces the cost at the property level. It reduces the cost of water to our residents, which keeps their units affordable. We can add solar power, which significantly reduces the cost of energy to our residents. All right. Now, solar we can use a little bit uniquely because we become the power provider to our residents instead of them, like in Tulsa, paying 12 or 13 cents a kilowatt hour or 17 cents a kilowatt hour. They can pay us 8 cents a kilowatt hour or 10 cents a kilowatt hour. It reduces their expenses by 20, 30, 40%, depending on how much they're paying for the kilowatt hour. So now their lives are more affordable. They have more money in their pocket, and we're producing that energy really at free, but because we paid for the solar panels, we're only paying 2 cents a kilowatt hour, and we can charge 8 cents a kilowatt hour. We make the 6 cents a kilowatt hour spread. What does that mean? Every single unit in that property, we just reduced every single unit of that property is now paying $60, $70 a month extra for living. But they were spending $100 a month. Now they're only spending $70 a month. So it's better now that $30 more is in their pocket, $70 more is in our pocket. per unit. Times that by 245 units, you're talking about $3 to $4 million of value at today's current cap rates in today's current market, distressed market. Adding $3, $4, or $5 million of value with a single decision, and we make units more affordable to our residents. Like, that's a win-win. And we help the environment. That's wonderful. And we lower our carbon footprint. Great. But what matters is we helped improve people's lives. And we made money doing it. So yeah, there's a difference between impact and ESG. Great question. We'll get more into that in the podcast if you want to take a chance and listen to that. And to the earlier question that we had bad experiences. Yes, we have a whole set of podcasts about the dark side of commercial real estate. So if you want to hear when things go awry or go really weird, like having a mover drop a mobile home on a highway and then get in a fight with the cops and get arrested, and now our mobile home is stuck on the side of the highway and we're getting calls to come move our house out of the road, like things like that. Awesome. All right. Any other questions? All right, everyone. Thanks for joining the call. Wrap in about 45 minutes. Presentation and questions. Also, this is the time, like if you want to make a difference with me and with Jesse, you want to have an impact in the world, you want to create meaning with your dollars and make a return, then this is the place for you. I don't know of anyone else, any other syndicators out there doing this. I simply don't. I've never met them. I've talked to other people. None that I've ever spoken to do this. We do this, and we've been doing it, and we know how to win, and we won. So come join us. One quick question. Great question. How soon before the fund can be used? Excellent. Because this isn't an acquisition fund where we're going out and sourcing properties and finding properties and buying properties and hoping we get a good price in the front end. We already have the prices. We already know the properties. We already can execute the business plan. Instead of your money sitting in a pot for 6 months or a year before it starts working, it goes to work right away. Great question. So the fund it deploys cash immediately. When will you start earning a return? You'll start earning a return. So the returns start accumulating as soon as the money's deployed, as with any fund. So because we can deploy capital right away, your cumulative return starts building. All right away. Returns, great question. Quarterly distributions, at least through the build-up period, the construction, the rehab process. And then once things stabilize, we'll look at monthly distributions. But in the beginning and per contract, we're going to stick with quarterly distributions. Ideally, we'll get to monthly distributions, particularly for those in the 10% category, A1, because if you invest and you're getting a 10% return and you get that monthly, we already know what it's going to look like. We don't have to balance the books. We already know it's there. We see the funds coming in. We can distribute that easy. All right. All right. Thank you, everyone. Have a wonderful Christmas, New Year's holidays. Enjoy some time with your family. Make sure you eat plenty of pie and cake. And if you're like us, we do brisket. I'm sorry, I'm a meat eater. I love meat. But we do brisket for Christmas dinner. And it's been so wonderful to talk to everyone. Have a wonderful end of the year. And in 2024, let's kick off and let's go make a difference. And let's go make some money in the process. All right. Thanks, everyone.